Yeah, I know the price is down. But you want all those views. You want all the sweet clicks. You want all that price stuff. I get it. But just hear me out for a second. The SEC and the CFTC may just have changed everything. For years, these agencies have been attacking Bitcoin any chance that they get. And they also attack each other. But they finally agree upon something. This week was probably the biggest breakthrough in over a year, which, by the way, could affect price. I know. The price is down this morning. The price matters, yes. But this is really big news. Yes, I will mention the price at 69,000 something. Okay, and then I'll say something like, emotions, this is beyond Bitcoin, let's go. Or, do you like let's dive in better?
Bitcoin price, let's get that out of the way, okay? It's sitting at around $70,000 at the moment, which is down about 2.5% as of this recording. The Fear and Greed Index is at 23, in extreme fear. It's sunny and 86 degrees outside. Tom? Perfect, good, we love it. You know why we love it? Because what happened yesterday has nothing to do with price and everything to do with the future of Bitcoin and of your right to actually use it. Here's the thesis today. The SEC and the CFTC just ended 6 years of regulatory warfare. 6 years of attacking Bitcoin. 6 years of fighting each other over who gets to regulate what. And yesterday at the DC Blockchain Summit, they made a joint announcement that changes the game. Not the player, the game. Today I'm going to break this down for you. First, what the SEC's Paul Atkins actually said at the DC Blockchain Summit and what the new token taxonomy means for Bitcoin and the 15 other things they listed alongside of it. Second, the privacy win buried in this announcement that almost nobody is covering correctly and why Bitcoin developers just got their biggest legal protection in years. And third, the Clarity Act. That's the thing that you've been hearing about on X that's always in a state of just about to pass at 3 p.m. today. Senator Lummis says it is happening, hell or high water, at the end of the year. We'll talk about whether she's right. Bitcoin is the answer to everything, but today I want to make sure that you understand exactly how close we are to a world where Bitcoin can be freely used as money without asking anyone's permission. Quick background, because if you're new here, you need to know what we're actually talking about. The SEC, Securities and Exchange Commission, their job is to regulate securities, stocks, bonds, anything that qualifies as an investment contract under something called the Howey test. How do we test that? You invest money in a common enterprise expecting profits primarily from the efforts of others. That's a security. Regulatorily speaking, the SEC owns that. Now the CFTC, Commodity Futures Trading Commission, they're in charge of commodities and future markets, oil, gold, things that are things, not investment contracts. Now here's where Bitcoin enters the picture. For the past 6 years, Gary Gensler's SEC said everything is a security. Bitcoin, Ethereum, whatever your cousin is shilling on Telegram, that's a security. Under our jurisdiction, come register with us or we will find you. The CFTC said, wait. Some of this stuff is clearly a commodity. Bitcoin is a commodity. This is ours. Newsflash CFTC, Bitcoin belongs to all of us. Anyway, they fought publicly for years while Bitcoin developers, builders, wallet creators, all of them had no idea if they were waking up to a lawsuit. That's what they call regulation by enforcement. You had no idea what the rules were until the SEC told you that you'd broken them. Well, that era just ended yesterday. So here's what happened. Yesterday, Paul Atkins, the new SEC chair, takes the stage at the DC Blockchain Summit in Washington, and he drops this.
Now, I suspect that many in this audience are really tired of hearing about the perils of uncertainty. Well, quite frankly, so am I. It's way past time for us to stop diagnosing the problem and start delivering the solution. On that note, I should like to walk you through my thoughts for what a safe harbor proposal could consist of.
Ooh, solution, you say? Here's Atkins on CNBC going further into detail. Take a look.
First of all, yes, yesterday was a real break with the past, a formal break. The Commission came out for the first time with an interpretative release that really sets a line between what are commodities in the digital asset space and what are securities. And the significance also about this particular release that we did is that the CFTC participated with us in it. And so they had some guidance that's included in that release along with our interpretation. So basically, as you said, and that tripped off your tongue very well, so it's very good, we are outlining 4 types of assets that are not securities, and those are digital commodities, digital tools, digital collectibles, and stable coins. And stable coins per the Genius Act that was enacted last year. So we're breaking with the past. We are now giving clarity from the SEC's perspective as to what are and are not securities.
Okay, let me break this down because there's a lot in here. The SEC, in conjunction with the CFTC, just published a 68-page interpretation of how existing securities laws apply to crypto. Sounds like someone's going to need a ChatGPT subscription. This is effective immediately, and it establishes 5 categories. Category 1, digital commodities. Bitcoin and 15 other tokens. Well, these are not securities, that's CFTC territory. Category 2, digital collectibles. NFTs and digital art, these are not categorized as securities. So your monkey JPEGs are safe. Category 3, digital tools, utility tokens, access passes, not securities. Man, we're on a roll. Category 4, payment stablecoins. Under the Genius Act framework, these are not securities. Category 5, digital securities, which I assume are going to be labeled as securities. Yes, this is the only thing that stays in the SEC's lane, traditional securities that are tokenized. We're talking about a stock on a blockchain. That's it. Paul Graywall, the chief legal officer at Coinbase, said it best. 2023 me couldn't have imagined that 2026 me would see such a thing. Now, I want to acknowledge the bad because there is bad in all of this. 15 altcoins just got classified alongside Bitcoin as digital commodities. We're talking about Solana, XRP, whatever else made the list. Now, a lot of people on Bitcoin Twitter are rightfully annoyed by this. We thought that, the altcoin cycle was finally dying. And the Howey test is pretty clear. Bitcoin is the only true digital commodity. Everything else is structured like an investment contract. But the regulators drew their line and 15 alts got through the door. That's the bad of all of this. Before we go any further, given to what we just talked about, today's sponsor is actually relevant. If you're paying attention to where the regulatory environment is heading for Bitcoin mining infrastructure, the people making those decisions are all going to be in one room this summer at Mining Disrupt Miami, July 21st through 23rd. It's the world's largest Bitcoin mining expo. It started as a Telegram chat between miners and insiders, and now it's the place where the entire industry converges. Operators, energy companies, hardware manufacturers, the people building Bitcoin's physical foundation are all going to be there. And now that Bitcoin mining is formally confirmed as a digital commodity, not a security, not under the SEC's thumb, the conversation happening at that conference this summer is gonna be lit. And if you go to miningdisrupt.com and you use promo code SimplyBitcoin, you'll get 20% off your tickets. Genesis and mining tiers sell out first, so you better go to miningdisrupt.com right now and go get your tickets because they're selling out. Okay, now the good. And this is the part that actually matters. Here's what almost nobody is saying correctly about yesterday's announcement. Under Gary Gensler, the SEC wasn't just trying to regulate Bitcoin. They were trying to classify Bitcoin wallet developers as securities broker-dealers. Think about what that means. If you are writing software, if you are building a Bitcoin wallet, an open source protocol, any tool that touches digital assets, you would be required to register with the SEC. And the moment you register as a broker-dealer, you are legally required to implement KYC and AML programs, know your customer, and anti-money laundering programs. This is your Bitcoin wallet asking for your name, your address, and your photo ID. That was the direction we were headed. And this wasn't theoretical. Lola Meir from The Rage, and look, if you know me, I don't usually quote The Rage on this show approvingly, but she said it perfectly. The SEC's interpretation now makes clear no AML KYC for Bitcoin, at least not under the SEC's authority. Probably the biggest advancement for privacy under the entire administration. Someone in her replies wrote, "I can't believe I just read a post from you about an advancement for privacy." And she was like, "I know, right? Alas, the day has come." If Lola Meir is celebrating a Bitcoin privacy win, something real just happened. And then the CFTC went even further. Phantom Wallet. You may know them as the Solana wallet, but that's beside the point. They received what's called a no action letter from the CFTC. And in plain English, The CFTC will not pursue enforcement against self-custodial wallet developers who connect users to regulated trading venues, as long as they don't custody user funds. Under existing U.S. law, any entity that facilitates derivatives trading typically has to register as an introducing broker. And that rule was written for Wall Street middlemen, like fax machines and people in suits. But as Bitcoin and crypto wallets started integrating access to markets, developers faced a gray area. If you're just writing software and your wallet connects users to a regulated exchange, are you a broker? The CFTC just answered that. No, you are a software provider. You just write code. You don't touch the funds. You route through registered intermediaries. The CFTC will not come after you. And this is the first time that line has ever been formally drawn. Here's why this matters beyond the legal language. Under the previous administration, ambiguous intermediary rules were used as a weapon against developers. For instance, Tornado Cash developers were prosecuted for writing code that didn't even touch user funds. Front ends were shut down preemptively before anyone was charged. They're just gone. The chilling effect pushed builders offshore. Wallet of Satoshi, one of the best Bitcoin Lightning wallets in the world, pulled out of the US market entirely rather than risk prosecution. But they're coming back. US market back open. And every developer watching this right now, every person writing open source Bitcoin software just got a legal anchor. The government drew a line, and for once, Bitcoin was on the right side of it. You write software, you don't custody the funds. You route through registered intermediaries. You are not a broker. 6 years of uncertainty gone this week. Okay, the Clarity Act. So clear you can read it underwater. At the same DC Blockchain Summit, Senator Cynthia Lummis stepped up and said this.
I thought we'd be doing a victory lap by now on passage of the Clarity Act or market structure. I thought we'd be doing that victory lap at the end of the last calendar year. But man, did we get hung up on things that I did not expect we would. Of course, the biggest thing being the request to reopen the Genius Act so we could deal with the issue of yield versus rewards. So as the industry has matured, the legislation behind it has matured. We've all sort of grown up together. And I want to tell you, it's been a great ride. As you know, I'm not running again. So number one, we're going to have this thing done come hell or high water before the end of the year.
I love Senator Lummis. She's been fighting for this legislation longer than my open clause has been trading at a negative, which is a long time. Okay, here's where things stand. Banking committee markup is expected second half of April, after Easter. And the big sticking point has been stablecoin yield. Banks have been refusing to allow stablecoins to pay yield to its holders because it competes with their deposits. That standoff is reportedly breaking. The banks are coming to the table. Senator Lummis also said they think they have the DeFi issue resolved. What, did you get rid of it? My honest take? The SEC and the CFTC interpretation gives you clarity right now, today, effective immediately. 68 pages, 5 categories, no KYC for Bitcoin developers, and that's real, and it does not need Congress to act. The Clarity Act would lock all of that in law permanently, which is much harder to reverse, and that matters. But the legislative window is closing. Nothing of substance tends to move after June in an election-adjacent year. Midterms heat up, politically viable moves get prioritized, everything gets sort of kicked. If Senator Lummis gets the markup done in April, and I hope she does, there's a real path to passage before the clock runs out. But if it slips past April, they should probably rename it the Murky Waters Act. Still not clear and far more murky, am I right? Real quick, because everything we just talked about leads here. The government just confirmed if you hold your own Bitcoin in your own wallet with your own keys, you are a sovereign individual. No KYC, no broker registration, no one between you and your money. But a lot of people watching this want to get self-custody and genuinely don't know where to start. TheBitcoinWay.com makes it easy and simple. And if you go to TheBitcoinWay.com/BeyondBitcoin, you'll get a free 30-minute consultation, one-on-one, no sales pitch. They walk you through exactly what self-custody looks like for your specific situation. Also cybersecurity, Plan B residency consulting, the full picture of financial sovereignty. TheBitcoinWay.com/BeyondBitcoin, that's the link, free 30-minute consult. Book it now. Okay, so the price. My producer told me to talk about the price, so here we are. About $70,000. down a couple points on the morning. You get arguably the biggest regulatory clarity announcement in 6 years, and Bitcoin sells off. Classic. It's fine. Here's the macro picture, and this matters for understanding where we are. The U.S. national debt just crossed $39 trillion. We were at $38 trillion in October. We're adding roughly $1 trillion every 5 or 6 months. $40 trillion is coming this year. 50 before the decade is out. What's 50 trillion among friends, huh? Just get it over with, guys. Just push the damn overdrive button already, please. And here's the thing about the war in the Middle East and what it's doing to the macro picture. And I know this is coming out of left field, but listen up. Fernando Naito from the Bitcoin Perception put it better than I ever could. Rate cuts are impossible with oil-driven inflation, and rate hikes are impossible with war-driven debt expansion. The Fed is truly stuck. He compared it to the 1970s oil crisis, when gold went from $35 to $850. And he said Bitcoin at 69,000 in the most constrained monetary policy environment in 50 years is either the most underpriced asset on earth, or he's completely wrong about everything. There's no middle ground. The Fed met this week, paused rates, didn't cut, didn't hike, just sat in their seats, frozen, because what are their options? They cut rates with oil at $100 and inflation explodes. They raise rates with war-driven debt expansion and the economy stalls. So let's hold rates and watch inflation creep higher. They know this, we know this, Bitcoin knows this, but it doesn't care. Meanwhile, while Bitcoin is sitting at $70,000, the fear and greed index is at 23. Extreme fear. The same number it was when we were at 45,000. Here's the thing about extreme fear. That is not a prediction. That is not me saying to buy. I am not your financial advisor. I'm just noting the folks panic selling their Bitcoin this morning to cover their next Costco 24 pack of paper towels are making a very interesting decision in a very interesting week. You see where this is going, right? We have a macro environment where the Fed is frozen. The national debt is past $39 trillion and accelerating. Oil is above $100. Inflation is higher than ever expected. And a war in the Middle East is an open variable at the moment. And we have a regulatory environment where, for the first time in 6 years, Bitcoin developers know what the rules are. Wallet builders are legally protected. Self-custody is affirmed. Bitcoin mining confirmed as digital commodity, not security. KYC and AML requirements do not apply to Bitcoin software. Monetary chaos, regulatory clarity. That combination, that is exactly what Bitcoin is built for. Think about what a Bitcoin developer in 2020 faced. No regulatory certainty. The SEC classifying everything as a security. Tornado Cash developers prosecuted for writing code that didn't even touch users' funds. Think about what a Bitcoin developer in 2020 faced. No regulatory certainty. The SEC classifying everything as a security. Tornado Cash developers prosecuted for writing code that didn't even touch user funds. Builders fleeing offshore. Now compare that to what a Bitcoin developer in 2026 faces. You can write software. You can vibe software. You can build wallets, you can build self-custody tools. The government drew a line and you're on the right side of it. The day Bitcoin can freely be used as money without permission just got a lot closer. Now I want to acknowledge the bad one more time because it's worth it. 15 alts got classified as digital commodities. The shitcoin cycle everyone hoped was dying just got regulatory oxygen. If you are a Bitcoin only purist, and a lot of you are, and I respect that because I'm kind of a Bitcoin purist myself, this is a legitimate criticism. The counter argument has always been, we don't need the state to protect Bitcoin. Bitcoin wins on its merits alone, which is probably true. But here's the thing. Gary Gensler tried to classify Tornado Cash developers as unregistered brokers, and 2 of them are sitting in prison right now for writing open source code. I will take a world where wallet developers are free over a world where they're in jail, even if that world also includes Solana getting called a commodity. I'd take the win. Bitcoin is honestly the answer. The market doesn't always price that in immediately, but the institutions, the developers, the lawmakers, they are starting to understand it, one 3-letter agency at a time. Real quick before we sign off, ClubOrange, formerly known as the Orange Pill app, this is the Bitcoin community app, the premier app, the place where Bitcoiners actually connect, not just to share memes, but to find people in your city, find people at the same point in their Bitcoin journey and actually build a real community around that. I've met so many of you there, and honestly, thank you so much for reaching out. It's been wonderful. You can find me there. I'm at Oceans, OSHINS. I'm on it. If you want to connect with me directly, go for it. It's cluborange.org, and if you haven't joined yet, this week is probably a good week to do it. You know what's funny about all this? For 6 years, the regulators told us implicitly through enforcement actions, through lawsuits, through prosecutions, that Bitcoin was dangerous, that the people building it were criminals, that the technology needed to be controlled. And Bitcoin, it just kept building, kept growing, kept producing blocks every 10 minutes. Now, the same regulators are actually saying, digital commodity. Software providers are not brokers. No KYC required. Bitcoin didn't need the SEC's approval to exist, but it's kind of nice that the SEC finally stopped pretending it could disappear. Anyway, thank you so much for watching this show. If you like what you see and you want to see more, make sure you hit that like button below, or you could subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. Also, don't forget to hit that notification bell. Leave us a comment if you like. If you want to reach out to me directly, I'm on X at RunDanceBitcoin. Otherwise, I'm Oceans. This is Beyond Bitcoin. Until next time.